Hi there, and today's update is about the Bounce Back Loan Scheme. So, this was made available from Monday, the 4th of May, so this Monday just gone. And it is a small loan scheme aimed at small businesses looking for less cash for a quick loan than they would have done under the business interruption loan scheme. So the amounts that are being offered are between £2,000 and £50,000, up to a maximum of 25% of the last business year's turnover. So interest rates are going to be set at 2.5% per annum. So that's an equivalent on a £10,000 loan of about £250 per year. So that's really, really low, super competitive. Now, the government is going to pay the first 12 months of the interest charge, and there'll be no payments for the first 12 months. So the first 12 months is completely interest free and repayment free for the borrower. So this is fabulous news if you think your business is going to be in trouble and is going to need some time to recover for that first 12 months. But after that, the repayments start to come in from month 13. So these loans are going to be available for limited companies, partnerships, or the definition is tax residents. So I'm guessing that means sole trader. Repayments, as I say, are going to start from month 13 and they can be for up to 5 years. Now, there's no early repayment fee, so if you want to pay it back any sooner, then you can, but you could take the additional 5 years after that first 1 year period. So the whole length of the loan, including the 12 months interest free and the 5 years payable afterwards, is a total of 6 years. Now, they are 100% backed by the government, so that doesn't mean that if you don't pay it, then the government is going to pay the debt off. So the government will back the loan and pay the loan off to the lender, but then you will owe the government. So you will still have to repay that debt in the event of default. Now, it's available now through accredited lenders. These are same types of lenders that were available through the CBILS loan. So some of the new challenger banks have not yet got their accreditations and aren't yet able to provide those loans. So Starling, for example, if you wanted to apply for a loan from Starling, you would put the amount you wanted to own to borrow in and the bank account number, and then when you press return and file the submission, it tells you that they are still waiting for their accreditation. They'll get back to you once they know that they've got that, so you can then continue your application. But if you're with someone like Barclays or Lloyds or HSBC and all of the current banks, the bigger banks, then you can make your application and that cash, that advance literally comes through in some cases within 24 hours. Now, there are some conditions. You can't apply if you already have a CBILS application in place, but if you have a CBILS application in place and it's not gone through yet, you can convert that to the bounce back scheme. Now, the challenge with that, of course, is if you've applied for more than the £50,000, then you have to decide whether you're going to do one or the other. Do you wait for the more than £50,000, or do you put your application in for your £50,000 on the bounce back loan scheme? So there's a decision to be made there based on how much you really need to cover your liabilities. You must still be trading as at the 1st of March 2020, and you must not have been in difficulty on the 31st of December 2019. Now, you don't have to prove that when you put your application in. You are literally just self-certifying to say that you are able to pay this loan back, you are still trading, and you were not in difficulty. So you have to put in details of your bank account details, you have to add details of your company registration number, that kind of thing. But you don't have to provide any financial evidence whatsoever to say whether or not you are viable as a business for this loan. You're basically self-certificating affordability. So 50% or more of your income must have come from trading, not from investments or royalties or other things like that. There is no personal guarantee that is going to be asked of the bank, and there are no early repayment penalties. So if you did want to pay it back early, if the business does recover, then of course you can. Now, the scheme is initially going to be open until the 4th of November 2020, so you don't have to rush to apply for funds now if you don't need them yet. Now, the only risk or the caveat that I would say is that the lenders are not responsible for the borrower's decision to borrow. So it's up to you to have done your homework to make sure that your business, based on what you know now, is going to be able to repay that loan later on when it starts to fall due. So make sure you understand how much those repayments are, when the first repayment is going to be, and make sure that you, based on current information, you are going to be able to repay that loan. So that's it from me today on the bounce back loan scheme. So if you have any questions or queries, please drop them in the comments and I will answer them. Thank you very much. Bye for now.